Johnson & Johnson, a popular stock that is a dividend king, is trading right at their 52-week low. Come down here, we can see their 52-week low sitting at about $143 per share. They're currently trading at $146.66. Now, this is a company I talked about a month or two ago, but we have some new news out regarding this company, and most importantly, they just released their latest quarter's earnings report, which we need to jump into. So let's go ahead and get started on this analysis. We can see over the past year, the company is down around 9%, and year to date around 7%. And the most recent bit of news we need to touch on is they also just recently increased their dividend payment by 4%, bumping up that dividend payment to $1.24 per share. Let's go ahead and jump into the dividend metrics for this company. And like always, if you'd like to download this sheet or any of my other spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. But let's go ahead and come over here and plug in JNJ and hit enter. And you can see all this data is going to automatically load in thanks to the help of the ticker data add-on in Google Sheets. Now, the starting dividend yield for this company is sitting at 3.38%. Now, here's what's interesting about that. I was doing some research just a little while ago, and if we look at the dividend yield history for this company, this is the highest starting dividend yield this company has had over the past decade, with the exception of March of 2020. So again, the highest starting dividend yield over the past decade, excluding March of 2020. So that's a pretty interesting data point. We can see the payout ratio for the company pretty low at 33.5%, but the free cash flow payout ratio quite a bit higher at about 64.5%. Now, like I mentioned earlier, they're a dividend king with over 50 consecutive years of dividend increases, and over the past decade, they've gone from $2.59 to $4.70, and with the most recent dividend hike, they are now at $4.96 per share. The dividend growth has been decent, with the 10-year dividend CAGR at around 6% and the 5-year 5.75%. Now, here's where there's a little bit of concern surrounding the company. Free cash flow is not really growing at a super healthy rate, and we have to keep in mind dividends are paid out of free cash flow. If we come down here and look at the free cash flow versus dividends paid out, we can see the free cash flow is definitely covering those dividend payments, but we have to keep in mind this is a pharmaceutical company we're talking about. This company needs a lot of capital to reinvest back into the business for research and development and to expand their product pipeline. So obviously we don't want dividends eating up all of their capital. We can see the free cash flow payout ratio has seen some slight increases over the past couple of years. Not necessarily something that I want to see, but it's not a major difference overall. Now, if we go ahead and jump into the earnings report, we can see Johnson & Johnson announced that they had Q1 non-GAAP earnings per share of $2.71, which was a beat by around 6 cents, and revenue of around $21.4 billion, which was up about 2.3% year over year, which was in line with analysts' expectations. Let's go ahead and dive a little bit deeper into this earnings report. Now, on this earnings report, the first thing I want to look at is the 8th slide. We can get some general insights into this earnings report. We can see sales are up year over year. We can see Q1 2023 at about $20.9 billion and Q1 2024 about $21.4 billion. So we saw an increase there. And then if we move over to the 12th slide, there's some good insights here. We have to keep in mind Johnson & Johnson now has 2 major segments to its business, especially after its recent spinoff with Kenvue. Now, the larger part of the business is going to be the innovative medicine segment, but then we also have the med tech segment. And for example, we can see in 2024, innovative medicine as of Q1 came up with about $5.8 billion and med tech at about $2.1 billion. Now, if we jump over to the 15th slide, we're going to see something that I love to talk about, and that is capital allocation strategy. I love it when companies include this in any of their investors' presentations or annual reports, because you can gain a lot of insight as an investor. Now, when we talk about capital allocation, one of the things we need to keep in mind is how is the company growing and how are they going to reward me as a shareholder? And keep in mind, there's 5 different things that a company can do with their free cash flow. This is something I talk about pretty frequently on the channel. They can reinvest back into the business, they can pay down debt, they can buy back shares, pay out dividends, or attempt mergers and acquisitions. And as an investor, I want to know how they're using their free cash flow. I want to know how they're going to reward me. And they kind of break that down here, what their priorities are. We can see their higher priorities up top and their lower priorities down low. So they break down their capital allocation. Now, the first thing they have listed is organic growth for business needs. Obviously, again, this is a pharmaceutical company. They have to invest a lot of capital into research and development to continue to expand their product pipeline because that is the lifeline of the business. So obviously, this is a huge priority for the company, and this is something that should definitely be the priority for the company. Now, after that, we can see the next thing they have listed is going to be competitive dividends. And like I've mentioned, we've seen from management over the past 50 years, this is a priority for the company because they've been increasing dividend payments for 50 consecutive years. We can also see we have investment in mergers and acquisitions. This is something Johnson & Johnson pursues semi-actively. And then we have share repurchases listed as well. Now, it is at the bottom, but the company is seeking to buy back shares when the opportunities present themselves. And so we can see, for example, in Q1 of 2024, the company invested $3.5 billion in research and development and paid out $2.9 billion in dividends to shareholders. And like they have listed down here, their priorities are clear and remain unchanged. This has been the capital allocation strategy for Johnson & Johnson for quite some time now. And then finally, if we jump over to the 17th slide, this is something I touched on just a moment ago, the two big business segments for this company, innovative medicine and medtech. And we can see they told us they expect slightly stronger sales growth in the first half of the year compared to the second when it comes to their innovative medicine. And then we can see for medtech, operational sales growth is expected to be relatively consistent throughout the year. Now, as I was reading through Johnson & Johnson's earnings call transcript, something that they touched on quite a bit, just like you'd expect from any pharmaceutical company, and something that I mentioned just a few moments ago is the pipeline. Pipeline is extremely important for this company. We can see the CFO talked about this quite a bit. He said, looking ahead, we have many important catalysts in the pipeline that will drive meaningful near and long-term growth across both innovative medicine and medtech. And if you jump over to Johnson & Johnson's website, you can actually see what is in their development pipeline and what stage it's at, whether it's at phase 1, phase 2, phase 3, or registration. And we can see there's currently 95 listed here, and it looks like we have about 7 different things in the pipeline that are at the registration level. So again, that's why they're investing so heavily into research and development. Now let's touch on some of the bad news currently surrounding Johnson & Johnson. We can see the FDA recently approved a drug that is very similar to Johnson & Johnson's top-selling drug Stelara. And if we scroll down, we can see this new drug is set to be launched in February of 2025, and this will likely eat into Johnson & Johnson's Stelara profits. And to give you an idea just how big of a deal this is, Stelara is Johnson & Johnson's best-selling drug, generating sales of around $10.9 billion in 2023, so this is a pretty big deal. Now, but for reference, we do have to keep in mind this drug is only set to launch in Europe and Canada as of right now, which both are large markets, but it's still not in the US. Now, the last bit of news I want to touch on for Johnson & Johnson is some of the legal issues that they have been battling as of late. We can see first off, they had a $149.5 million settlement in regards to the opioid-related claim in Washington state. Now, for a company the size of Johnson & Johnson, a claim of $149.5 million isn't necessarily super large, but it is something to keep in mind. But here's where things start to get worse. If we come down here and look at this other lawsuit, we can see this one is in regards into the talcum-based baby powder. Johnson & Johnson has agreed to pay $700 million. It's quite a step up from the $150 million we just saw. And then here's where things start to get really bad. If we come down even further, we can see analysts are estimating Johnson & Johnson will eventually be forced to pay $10 billion to $15 billion to resolve the plethora of talcum powder related lawsuits. Now that is a large amount of money, and for reference, if we jump back over to a spreadsheet, let's see how much cash and cash equivalents that Johnson & Johnson currently has. We'll pull this in with the ticker data function, click Johnson & Johnson, click cash and cash equivalents, and as of 2023 and hit enter, and we can see when this data loads in, it's going to tell us they currently have around $21.8 billion in cash and cash equivalents. And according to what we just saw from analysts, lawsuits may come in at around $12 billion. So for reference, we can see that if we take lawsuits and divide it by the cash and cash equivalents, we can see that lawsuits are projected to eat up around 55% of Johnson & Johnson's cash and cash equivalents. Now that is a large amount, and that is not a good sign for the company. Now, with all this being said, is Johnson & Johnson trading at $146? Its 52-week low. Is it trading at a good value? And to answer that question, let's go ahead and jump into my stock valuation spreadsheet and look at a few different valuation models like always. And again, you can download any of my spreadsheets on tickerdata.com. Let's go ahead and plug in JNJ and hit enter. And you can see all this data will automatically load in. Now, the beta for this company is sitting at just 0.53, so you should see very low levels of volatility with the company. Now, the first valuation we typically look at is going to be Graham's valuation, but I would argue this is probably not the best valuation in the case of Johnson & Johnson. So we're going to move forward and look at our discounted cash flow analysis. Now, the idea behind our DCF models, we should be able to value a company based on how much free cash flow this company is going to be able to produce in the future. So the first thing we need to do is project a growth rate to the future free cash flows for this company. And after looking at some historical data and analyst projections, I'm going with 5.5%. For the future free cash flows of the company, I find the present value of those future free cash flows and then add them together, add the company's cash and cash equivalents, and subtract out the total debt to get the equity value, divide by shares outstanding, and we come to a DCF price per share of $163.19. Again, typically the next valuation we look at is the multiples valuation, but you can see these comparables are just not providing good price to earnings multiples as of right now, so this valuation really doesn't work. So that means the last valuation we're going to look at is going to be our dividend discount model. And again, this values a company based on how much they pay out in dividends and how much that dividend is growing over time. Now, in the case of Johnson & Johnson, if we project a dividend growth rate of about 4.5% with a discount rate of 8%, we come to a dividend discount model price per share of about $148.09 per share. After looking at the dividend metrics more for this company, I think a dividend growth rate slightly below 5% is going to be pretty close to accurate, and like we saw earlier, their most recent dividend hike came in at around 4%. So when we apply all of that again, we come to a dividend discount model price per share of $148. So if we jump over to the output tab, average these two valuations that we use together, we come to an intrinsic value of $155.64, which is above the current trading price for this company. So with a 5% margin of safety, it looks like it is in our acceptable buy range, and with a 10% margin of safety, acceptable buy price would be around $140.08. So there's definitely a lot of news you have to keep up surrounding this company, but as of right now, it does appear that it may be slightly undervalued. Now, you do have to keep in mind this company is not by any means a high growth company, and I don't think you'll see massive dividend growth moving forward. But if you're someone looking for very predictable and stable dividend payments starting at a nice yield with decent dividend growth, this could be a good option. But go ahead and let me know what you think of Johnson & Johnson stock in the comments down below if you plan on buying or selling. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the Ticker Data add-on in Google Sheets, then you can head over to tickerdata.com at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.